Today we want to talk about AVMs, and what AVMs are automated valuation models. And basically it's an appraisal without actually coming out to your home to do a physical inspection of your property. They may go and take outside pictures or someone to take outside pictures, but it's going to basically be based on the sales and the appraised values that are already recorded in your market. So a lot of times you will use these mostly on conventional loans, not so much on FHA. You'll use them a lot on HELOCs, or if you have sometimes you do some other type of loan, line of credit or something like that. This is when AVMs are mostly used. AVMs basically use mathematical modeling combined with publicly accessible data. Like I said, comp sales of comparable homes in your area, same bedroom, same square footage, same number of bathrooms, etc. Tax assessments that are out there, price trends, and historical value data. So basically, if you're in an area that does have not have great sales or a lot of sales, or you have a very unique property, an AVM may not be the thing for you. If you're somewhere where people move in and they don't ever move, and you've updated your house, I would definitely suggest getting a full-blown appraisal so that you get the most value for your home, and then they get to see the uniqueness about your homes. You may be in an area where people, they haven't upgraded their homes, and you have upgraded your home, especially if you're doing a refi to get cash out, or definitely if you're trying to, if you're in a sale, I definitely wouldn't recommend that in a sale unless it's just something where you want to save money. It's still cost for the AVM. It's probably a couple $100 less than actually doing a full appraisal. How AVMs are used mostly in real estate and mortgages, pre-qualification and lead screening. Lenders use AVMs to quickly estimate a home's value during a pre-approval or pre-qualification stage, determining the borrower's buying power. A lot of that stuff you'll see online when you see the estimated values on certain websites. Home equity loans, lines of credit, like I said, HELOCs. AVMs are mostly used and common during HELOCs. So they'll do that. It'll save you money instead of doing a full-blown appraisal on a HELOC. They're not going to loan you up to 100% of your value anyway. So usually if you get the 85-90% max, you're good to go unless you're trying to totally max out on your value in your home. Refinance evaluations for streamlined refinance programs. Usually when the LTV, which is loan to value, is low, you can use the AVM and that'll save you some time and some cost. And also portfolio and risk management companies, lenders, investors, servicers, they'll use the AVM to kind of estimate how much a property is worth if they're buying a book, a book of business from a lender, or there's some buying loans that someone is selling off. So AVMs, if you hear that term, is nothing to be scared of. It's basically just the automated value assessment of your home. Again, if you have a unique home, if you've done a lot of upgrades to your home, you want to get the full value of your home, you think your home is special, you may want to go ahead and get a full appraisal. If you have any other questions, you can reach out to me at reggiegrahamhomeloans.com or reggieloans.com. Have a great day.